So I get asked frequently about the market. What's going on in the market? And most people seem to think that the market's not doing well. It's actually up quite a bit this year. And we're seeing heated multiple offer situations weekly. And people ask, well, what about the big rise in interest rates? And I say, yeah, it's been substantial. What about, the two big bank failures? For sure, that was scary, destabilizing for a while. Or Meta laying off 10,000 people earlier this year and threats of more layoffs locally. All headwinds for sure. But what's been far more powerful have been two factors that I see. One is that local stocks have done well, and the market is driven almost entirely by that here. Almost everybody in the areas we cover pays with stock, RSUs, restricted stock units. So the top big cap stocks this year alone have added $3 trillion in market capitalization. And most of the people we work with, most of the people bidding on homes locally, get shares of those companies and pay for the houses with that. So their portfolios have gone up substantially. Map that on to the fact that we're at a very low level of inventory. Depending on how you measure it in the areas, in some ways we're at a very, very low levels of inventory. So we have a lot of money chasing very few homes. Simple supply and demand overpowers these other factors. And I've heard it dozens of times myself. People say, oh, we're growing out of our house and, it's time. We need to get into the schools, tired of renting, whatever. And so there's a large buyer demand. People have acclimated to the higher rates, which are substantially different. And yet, I think the net effect of all this is that the market's strong out there. So if you're thinking of selling a house, I've had a lot of people say they're holding off until the market improves. It's actually a good time. As a buyer, I would actually be a buyer right now. I'm looking for a property. I would buy an investment property now. The reason I would say that is if interest rates are at 8%, which they are right around there, the reason I'm talking mortgage rates, the reason is Fed has been raising rates to tamp down inflation. So if a piece of lumber costs 5 or 8% more next year, glass costs 5 or 8% more, paint, labor, cement, everything. Real estate tends to track inflation very, very well. And so waiting for rates to come down, I don't think it's always a great strategy. In fact, if you buy into this environment and rates do come down, prices might go up because people can, again, afford a higher price home with a lower cost of borrowing. So perhaps later you could refi. So if you're selling, if it's the right time to consider selling, I actually think it's a pretty strong market. We've done very, very well with all of our listings this year. And on the buy side, we've gotten some great deals too that I think over time will prove to be good investments. So if you're thinking of buying or selling, there's a strong case that it might be a good time to consider that. Reach out to us if we can help in any way. We're always here for you in any way we can be of service.